Hey guys, how you going? Back here on Bitcoin. I know it's been a pretty volatile morning for sure, and last few days. But we're here back on the charts. How you going, MegaWhale?
Hey Wolf, how you going, mate? We've been pretty under gun, haven't we, in the last few hours, looking at this?
That's right. Yeah, looking at the charts for a bit. It's always pretty interesting when the market crashes, and I think the interesting thing about this recent, I think we can definitely call this a crash, right? This is a correction from 39k all the way down to 30k in just a few days there. The last time we've had volume this high on the Binance chart, at least, was all the way back here on December 4th, and I think you'll remember that day a lot better than me. That was a bloody day, and we were both, I think, maybe awakened by the alerts going on in TradingView. I know certainly you were. You've told me about it in the past.
Yeah, well, didn't we actually do a collaboration video like a few days before? That was at the 50 SMA, am I right? That was when we did the collab, wasn't it?
So. Let me check. I think we did do a collaboration. We just lost the 50. Yeah, we did a collaboration. I think a few days before that happening, and I think we were warning of something like that happening. I mean, I don't know if you could expect it to be that volatile. I mean, that was a big drop, right? That was a 54,000 all the way down to 43,000 in like a couple hours. So I'm going to go ahead and say that was the pretty unpredictable price action there. But we were warning of a crash of some sort. But yeah, big volume. So I think we should just jump straight into it, right? I know that me and MegaWhale have a lot to talk about today. We're just going to try to take it one step at a time. And I know you guys watching on the other end here might have a lot of questions, and that's why MegaWhale's been kind enough to collect some community questions on Twitter there, so hopefully we get some of your questions answered.
Did we want to show those questions on screen now, or
have you got them up? Have you got them?
I've got them somewhere. Or did we just want to move on? What do you think? Does everyone want to see them? Probably.
If you want to get them up, I'll talk about the daily chart. You get them up while I'm doing that, and then we can get into it.
That sounds good.
All right, sweet. So daily chart on Bitcoin. I mean, we've been objective the whole time. We've told you this is a bear flag structure. Guess what? It was a bear flag structure, and it broke to the downside very sharply, as you can expect from bear flag structures. Now, what we also had, which kind of confused the situation a little bit, and rightfully so, was some sort of descending wedge formation, right? And that's typically a bullish pattern. I know that seeing that right after a bearish breakdown is very confusing. It's confusing for us as well to a certain extent. However, we could identify the fact that that was probably not going to play out to the upside. I personally used the volume, right? When you see ascending volume as the price moves downwards, I don't know what's going on there. When you see ascending volume as the price moves downwards, even if it's a bullish structure, that generally means the downtrend is strengthening, and hence you're probably not going to see an upside break. And we did not see that upside break. And instead, we've seen this massive breakdown towards 30K. 30K in May predictions have been thrown around on the Wolves of Crypto channel for months now, and that's played out. Now, what I would say is that if you measure the bear flag conservatively, now what I would like to say, and you'd agree with me on this, we both do Crypto Academy, we'll talk about that later in the video, but I know that bear flag structures, typically you want to measure it all the way from the top here, and you can definitely do that, and that would certainly be valid. However, it is also worth considering the fact that bear flag structures sometimes are over-optimistic in their targets, because you can have a massive downwards trend and go straight into a bear flag, and then that bear flag structure can predict something that's kind of to the point of almost irrationally low, right? To a certain extent, I think we need to realize that, market participants are the main reason why the market moves up or down, and bear flags only remain relevant to those market participants for a certain period of time. And so I have been predicting the measured move from the bear flag from the top quite extensively. But one thing I would do to make it a bit more realistic is, instead of measuring it from the breakdown, you'd actually measure it from this area here, right, the top. And that would be targeting something like 14K. And we're going to talk about that later in the video. I know a lot of people, and you probably got it there in those community questions, am I correct, where they say, are we going to hold 24K?
Yeah, there's a couple of questions asking what happens if we go below 24K, or what happens if the economy is still in a bad position as we reach 24K. So we'll answer that later in the video.
That's right, yeah. So we've got a few questions about that, but that bear flag is definitely one of the indicators there, targeting 14K. But as I was saying before, one of the ways you can measure this bear flag is actually from the more recent top, right before the actual flag pulled down into it, which is December 27th. Bring that down there, apply it to a breakout zone from the top, be very conservative. That targets 30K, and then supporting that, you also have the descending wedge formation measured from the first test of the resistance to the first test of support. Apply that to the breakout zone, and that targets 30K as well. So 30K is reached. And the preliminary targets are certainly reached for Bitcoin. And so now the question is, what's going to happen next? Well, we have to consider, and we have to stay grounded here and stay level-headed, and understand 30K is a major support zone. We've held it for like probably 5 months in the past throughout 2020 and 2021. It's not a zone that can be lost easily. We think it will be lost. I think it will be lost, but not. It's not just go. I highly doubt. I don't want to be too certain on it, but I highly doubt the price action will just fall straight through 30K in like 2 days, right? I think we'll see a little bit of retaliation. I think we'll eventually lose it, but it could be a little bit of a slightly drawn out process in which, maybe a few days at the minimum of consolidation around 30K, maybe a bounce back up to 33. Hard to say at this point because everything is extremely undervalued. But when you see things like the RSI reach levels that we haven't seen since January, when you see things like stochastic RSI bottoming out, when you see things like the MACD reaching very low levels as well, when you see things like the Bollinger Bands, the price being 2K, 2,000 USD below the bottom Bollinger Band, it gets to the point where it's kind of, even though we're seeing a strong downward trend, it's kind of irrational to assume we're just going to keep going straight down. It could happen, seeing as we're in a bit of a panic mode here, but that's what the TA is telling us, right? You don't want to be bearish going into support when everything's undervalued. Everything's suggesting the price is oversold. So, short term, could see a little bit of retaliation here, maybe 33K, something like that. But ultimately, longer term, the structure is very much gone. I don't think many people are debating that now, after this recent drop. And I think that's pretty certain. So I'll leave it to you, but ultimately, we're both kind of expecting the same thing over the next few months. We're both looking at 200-week SMA, but we'll get into that in a second. I'll give you the screen now.
Yeah, so I totally agree with everything you said, and I think that 30K zone will be defended quite aggressively by the bulls and just general retail investors as well. And I think a lot of people get trapped into the motion. I think you should be able to see on the screen now that just because the price is low, you should be buying. And although in a typical bull market, that is a correct statement because you expect the price to rise going forward. But in a bear market such as we are in now, with the economy looking pretty terrible, there's no reassurance that the price could actually continue upwards, and therefore just buying because it's low could result in you just buying and then it crashes even further. So what you talked about is pretty accurate. I'm going to go ahead and I think we're going to talk about the 24K target and show you guys our update on that, and then we'll go through the monthly and the weekly and show you a few other targets that kind of suggest that we're going to continue downwards or where we could bounce from. And then I'll probably throw it back to you, Wolf, and then maybe we can jump into the economic environment, talk about the DXY, talk about maybe how the price could actually continue past 24K, and then go through a bunch of community questions. How's that sound?
Sure thing, yeah, sounds good.
Okay, so myself and Wolf, we've been talking about 24K for ages. Like, since I personally called it in November 16th, Wolf probably called it pretty close to around that level as well. And I think in our first collab video, we showed you this chart here, and we talked about our ratio analysis between the 200-day moving average on the weekly and the distance between our projected bottom, which is the 11th of July. And you can see this is an image taken from that video. And we'll go ahead and bring up that same chart now. You can see we kind of pretty much predicted perfectly. We had this initial drop down to around 40,000, a initial high, a drop back to 40,000, a high, continued by a drop downward. So we had this ascending channel formation, which we broke down from, which Wolf just talked about on the daily, heading towards that 24K. So it's looking pretty optimistic in the sense that we do have that 24K region up and coming. Of course, this chart is lagging. It is the Brave New Coin Liquid Index. The real price of Bitcoin at the moment, Wolf, is at around 30,000 now, hey?
Yeah, that's right. It's to 29,900 as of speaking.
Yeah, so I'm going to go ahead and draw a line in so we can see that real price of Bitcoin is actually around this green line. So it's going to go ahead and do that. And as you can see, we're actually getting below that weekly, daily close price, which was previously around 31,600. So on the weekly chart, we are creating these new lows at the moment, which is obviously a bearish pattern, obviously a bearish sign, and indicating we can go lower. I do actually want to go ahead and bring up the monthly chart now, as we've just shown you our prediction for 24K, and I have utmost confidence that we will reach that still. Wolf, you probably agree, you have utmost confidence.
I'm 100% sure.
100% sure, yeah.
I don't see any doubt, yeah.
I'm going to go ahead and show you another chart that I want to bring up, which is the Ichimoku Cloud. But we go ahead and get rid of the conversion line, lagging span, leading span B, and plotted backgrounds. So we end up in a situation where we just have the baseline, which you see is this red line, and the 200-day moving average adjusted to a 7-day chart. what you can notice is every single time we actually fall below this baseline on Ichimoku Cloud on the monthly, we actually end up into a downtrend. And the downtrend results in the price actually meeting that 200-day moving average. And I know, Wolf, you've done a lot of talk about the different cycle theories and stuff, and you've got your own. I think which one do you use? You use the
4-year cycle theory, and also with the monthly chart, I use the 21 EMA.
The 21 EMA, and it's kind of similar to this, hey, in a sense that the baseline on Ichimoku Cloud and the 21, they're quite in a similar spot. They're not exact, but they're quite similar.
They're not exact, but essentially they predict the same things. That's right.
That's correct. What I do want to pinpoint as well, that every time we actually break back above this baseline, so you can see in the two instances, only after we have reached the 200-day moving average. So only when we reach the 200-day moving average, and then we come back. So we reach it, and then we come back and break above, that sends us into a new uptrend. And we have this aggressive rally upwards over the course of a couple months. So we can definitely expect the price to come down, hit that 200-day moving average. And obviously we're going to talk about the likelihood of us falling below it in a second. But say, for example, we don't fall below and we have this aggressive move upwards and the price crosses over that baseline again, that could trigger a entry signal on the monthly chart to indicate that we could see a potential move upwards.
Yep,
okay, I do also want to bring up one more chart on the larger time frame, which will be utilizing the 3-day chart. And we're going to talk about the RSI. And Wolf, I think I talked to you about the 34.3 for an RSI a couple times.
Yes.
Indicating that major drops. Have you taken a look into that one yourself yet?
I have, yeah, I have. After the last collab we did, I checked it out.
Yeah, it's a pretty good level, hey, on the RSI. It really indicates.
Yeah, I've also got an RSI level on the monthly chart. RSI is pretty interesting, right? Because RSI obviously is not a price action, but it can be used very majorly in order to predict big drops. Like what you're about to look at right now, every time we drop below 34, we see a massive correction. Like that's very interesting. And I was going to bring up on the monthly chart after you finish done here, there is a level, you could probably bring it up right now once you do the monthly. 44 on the monthly's RSI is the last two macro bottoms in 2018 and also 2015 that we saw on Bitcoin. So that's pretty interesting.
So you say 44?
RSI. 44 on the monthly RSI,
right.
Yeah. And we're reaching that. We're getting close to that right now, which I wanted to talk about. We're at 47.
Well, we'll bring it up. We'll bring it up after, and you can talk through it. But taking a look at this 34.34, I haven't got it exact, but it's kind of hard to zoom in. But 34.3 for an RSI. We talked about this last collab, that every single time we actually drop below, and you notice that we actually have dropped below this level now on the 3-day, we see a significant crash. And a lot of people are saying, well, you know, this last 24-hour crash was a huge candle. I know Wolf just showed you the sheer volume that we saw on this last 24-hour candle, being, you know, probably the biggest daily volume we've seen since, what was it? It was way back in the 3rd of December. And the RSI was a predictor of that. If you've been following, you notice every single time we lose this RSI, for instance, we lost it here, 25%. When we lost it over here, 40%. Lost it in the COVID crash, we saw 57%, and the pattern continues. We see 50%. I can go back to the other ones and show you, but the RSI has been a really good predictor of when this massive drop comes in. And we can see that officially now, according to the RSI, we are underneath this major now resistance at 34.34, indicating, in fact, we are going to see a sharp decline continuing in the next few days. Now, we did talk about the 30K zone being a potential bounce point. That is very much a possibility, but as always, the larger time frames are going to smooth out the analytical data and the mathematical data we get from these technical indicators to give a more broad perspective of the overall macro trend. Well, if we take the look at the smaller time frames like the 1 day, the 4 hour, the 12 hour, they're going to be more specific towards the immediate time frame, so better at predicting any short-term price actions. And I do say, when you're analyzing a chart, you always want the fundamental part of analyzing a chart. And the reason why myself and Wolf were able to predict this whole thing is because you have to identify the macro trend initially. From the macro trend, then you make your assumptions, and then from making your assumptions, you use your analytical data and your technicals to either confirm your hypotheses or contest them. And you go from a larger time frame to a smaller time frame, because smaller time frame indicators and smaller time frame moves have a lesser of effect or impact on the macro trend as in comparison to the larger time frame indicators. Wolf, do you want to add anything to that?
No, I think that's 100% correct. I think a lot of people have failed during this market drop, and they've learned a lot of lessons because they've been too caught up in the short-term price movements. And when you look at Bitcoin, you know, what it was doing in that bear flag formation, you start to remove all of the market patterns and just look at, like, I don't know, the 4-hourly chart and see Bitcoin going up. It's very easy to get misguided. But I see you bringing up 44 in the RSI right now.
Was it 44, sorry? You said 44?
44, 43 or 44. You can see the two macro bottoms have reached that,
but around that level
region. So it's only 2 data points, so that's worth noting. It's not necessarily a trend yet. You need 3 data points to confirm trend. However, it will be interesting to see how we react to that. That's what I'm interested about. And as of right now, again, you're on the BLX, so it's not fully updated. We're currently at 47 because Bitcoin's moved down to 30K, so we're getting pretty close to it. That's pretty interesting in my opinion.
So currently at 47, so yeah, we are close. Hey, we're a couple points off. That is interesting because, you know, obviously going down to 44, that would most likely retest that 200-day moving average, which will be 24K.
Yeah, roughly, yeah. And I think the thing as well is that, you know, we're at 47, we're very close to 44. If we just drop straight down to it, you know, we might actually have a chance here of breaking below 44. But this is why I'm kind of leaning towards we see a little bounce. Look, it's hard to say exactly because everything's so, you know, oversold right now. Well, that's what the TA is telling us at least. So you can't really predict the short term too well. But I would be slightly surprised if we didn't see some sort of retaliation. It would be a little bit illogical to me if we dropped all the way down from 39K to 24K with very, very, very little slightly bullish price action on the way. Like, look at that. That's 39K to 30K so far. Do you really see us going down to 24K without any green candles? I personally don't. Again, it could happen. It's not really a prediction. It's just an observation. But yeah, I think we need a little bit of delays here, in my opinion.
Correct. And as we mentioned before, you know, price moves, as we've talked about in the beginning of this video, that price will generally move between these support and resistance zones. And these zones are obviously known as demand zones and supply zones that we kind of move between. And we can see that, I don't know, for my followers who are watching my videos, we posted a video up over here saying if we lost this red line, we would see an immediate crash to 30K. And we did actually, in fact, see that. Here's that image. We can see that actually happened. But from here, like Wolf said, you know, we are now in a demand zone. And even though the macro technicals are looking more bearish, as Wolf just stated, that we have to be optimistic or at least aware of the potential, if not optimistic, just aware of the potential that we could see this zone aggressively defended by bulls. Because as Wolf just said, you know, this is a pretty major zone, guys. Look at this. We have that 30K retest in July. We broke over our 30K, we retested it again, and we've never really been underneath that since, what, December 2020. Yeah. So if we lose this level, the next theoretical level that we would reach will be that 24K region. And Wolf, did you want to go into anything else before we go ahead and talk about the potential for a drop below 24K?
I think we can. I think I'll briefly bring up some charts, and then we can talk about that's a scenario.
Okay, I'll go ahead and pass it over to you.
Sure thing. Yeah. Let me get my. Do you want to just enable screen sharing?
Yep. There we go.
Sweet. All right. So, yeah. So as you guys would know, we have that. I'll just talk about the 4-year cycle briefly because we have that 24K scenario, and that's based on the 200-week SMA, which is where Bitcoin's bottomed out on every single basically, you know, macro bottom we've had. We had it in 2015, 2018, even during the COVID drop. Their 200-week held on the weekly candle closes. We're not worried about wicks, by the way. So when we say 24K bottom, we're talking about 24K weekly candle closes. I think that's a very important point to get into because we can very easily be misquoted on things like that. Like, for example, in 2018, you know, the weekly candle bottom was 200. Not 2014, sorry. 2014. The weekly candle body was 210, but we actually wicked all the way down to 160. So we could see the weekly candle closes based on our, you know, initial predictions here at 24K or 22K, whatever it is, the 200-week SMA. But we could actually wick downwards to 20K or whatever. That's not part of it, right? So it's weekly candle closes we're worried about. You can't really predict wicks too much. It is likely we will see a wick below it. So if you wanted to be technical, you could say we're targeting a little bit lower than 24K. At least I am. But the 4-year cycle theory is not actually a theory anymore. It's a confirmed trend. We've had 3 data points. We have multiple pieces of evidence here to suggest that Bitcoin will be bottoming out on that 200-week SMA, and it will be happening before December, right? So date ranges aren't necessarily of concern. If we wanted to use the most precise date range we could get out of the 4-year cyclical theory, it'd be targeting November to December. However, we don't have precise date ranges, right? Because we only have a few limited amount of data points. So realistically, it could be any time from my calculations between July and January, right? It's a very vague region. So we have to kind of go with the flow here. But the point is, the November top was predicted by the 4-year cycle theory. We have topped out. Now we're in a bear market, and we need to be waiting to see that bear market bottom. One more thing that I will talk about. We've talked about the monthly chart quite well, and I want to talk about, for example, the 3-day chart a bit more. You talked about the RSI and the 3-day chart, and that's extremely relevant. But I also like to bring up the def cross we see on the 3-day chart. We saw the def cross on the 3-day chart in 2014 and in 2018, both preceding a 50% correction in a matter of about a month and a half on both occasions before we saw the cyclical bottom. We're seeing the def cross in probably one more candle. So in 3 days, we'll be seeing a def cross, and you can see that the correction's already started there. But that's just another piece of evidence there. So we've seen the def cross. And I actually wonder how the weekly chart is looking, because you've brought it up quite a lot in the past. The Gaussian channel on the weekly chart is something that's interesting. I know that we looked at it in the last video. I just want to see how it's going. So here's a good trend, right? So on the Gaussian channel, both the times we've flipped red, and these are the only times in Bitcoin's history we've ever flipped red on the Gaussian channel. We've seen that 50% correction that I just talked about on the 3-day chart, and the Gaussian channel will be flipping red probably in like the next week or maybe 2 weeks. So I think you'll agree, well, there's very little macro bullish evidence here, right? Everything's kind of pointing downwards. So it's just a question, and I'm leading on to your kind of next topic here. It's just a question of whether that downwards action will stop at 24K as predicted by our previous cyclical theory, or whether it will keep going down due to something like a recession. I'll leave you with that.
Yeah, so that's a great question. It's a question that I've had a lot of people ask. Well, we've both had a lot of people ask, because it is now becoming a looming threat, I guess, that now the closer we get down to the bottom and the more people become overly bearish or bearish in general, the lower these price targets are going to get. So, when me and Wolf initially called the bear market, we had a pretty conservative price target. Initially, mine was at 35K for an immediate drop, that first bottom, which we did reach, and obviously 24K was going to be my second and final target. But now, as we're getting closer to that, we're going to start seeing people even call for 6K. We might even see people calling for 4K. And I just want to say before we move on is, if they didn't call the top, don't expect them to call the bottom. And I said this last year before that May crash. I said, if they didn't call the top in May, don't expect them to call the bottom. And myself and Wolf both called the top. We both called the bottom July. But it's the same principle, guys. If they didn't call the top, they just don't have the objective analysis skills to really tell you when the bottom's in. So we're going to go through now and talk about, obviously, the potential threat and where the price will go if we drop down below the 200-day moving average and close a weekly candle below. As Wolf did mention, the weekly candle is important. That is 100% correct. Definitely agree on that. So it all comes down to the economic situation. And there's no doubt in saying the economic situation is quite grim. And Wolf, have you talked about much of this stuff on your channel?
I talk about interest rates quite a bit and the potential recession. Well, it's not a potential anymore. I think it's pretty much certain at this point. I talk about it quite often.
I know you talk about the bond yields a lot, and for Wolf's viewers, the bond yields, we're kind of extending from the bond yields, because the bond yields is a predictive measure of where the interest rates will be going in the future. So for example, if people expect future interest rates to rise, the bond yields rise preemptively to that. And currently the bond yields are massively front running the interest rates, suggesting that people are predicting the interest rates to currently continue to rise in future periods. So we have a situation at the moment where we've had immense inflation, and that's caused by, government spending, utilizing debt and inflation for economic growth, as well as the rapid and crazy increase in supply and printing of currency, fiat currency globally, in most nations. It's led to this situation where we have like these interest rates, and inflation in general has gone skyrocketing. And I think America's inflation, what's that, Wolf, at the moment? Like, they recorded 7-ish%, but it's more likely to be like 20 or 14 or whatever.
Yeah. They've changed the measure of which they record it with. So they're saying it's the highest level in 80 years. But most likely, according to actual predictions based on old measures which they used to use, probably the highest level we've seen since the Great Depression, at least.
I would have to agree. They changed what items they put in that basket of goods they claim to use. But anyway, what they use to combat inflation is they use interest. So they bring up the interest rates, guys, and we've seen that already happen. Interest rates have been rising pretty rapidly, and of course, according to those bond yields that Wolf talks about on his channel, people expect them to continue to rise. And I've talked a lot about this on my channel, but I'm going to say again over here that I expect interest rate basis points to hike at some time in the future past 1%. I believe we'll see hikes of 1% and up. I think 0.5% basis point hike is just the beginning, in my opinion. I think we'll start to see a climb rapidly, and the reason I say that is because even though interest rates have risen, it still hasn't risen enough to combat the rising inflation, because the governments are still funding economic growth through excessive use of debt. And I'm saying excessive use of debt because funding economic growth through debt is a very normal practice for governments. It's a very normal for economic growth, and it's actually quite beneficial when utilized correctly. The problem is they're funding through excessive growth, and they're printing an excessive amount of money, and their national budgets are suggesting a continuation in that trend to continue to promote economic growth through debt and inflation. It's causing interest rates to rise pretty rapidly. So what happens when interest rates rise? Pretty simple, guys. We have an increase in interest on your debt obligations, and debt obligations are held by individuals, retail, they're also held by companies, and they're also held by governments. So we're going to talk about the retail first, and we'll talk about how we're going to tie it all up, how this actually will impact Bitcoin going in the future. I know it's a bit of a lengthy explanation, but we'll get to it. So we have increasing interest rates on debt obligations, and that results in lower household available cash because cost of goods will rise massively due to the demand and supply imbalance, all right, as household expenditure decreases because interest rates rise. So household available cash decreases, therefore household expenditure decreases, therefore that negatively impacts the economy, which increases the cost of goods and services due to the fact that more interest repayments are being made on debt. So what do retail do? They start to sell off their assets, right? So their assets are liquid assets. Liquid assets generally are your bonds, your securities, your shares, cryptocurrency, stuff like that. For our Australian viewers, liquid assets extend to houses, right? In the Australian housing market, superannuation companies, governments, large companies can acquire residential housing or residential property for investment purposes. So in Australia, I'm not too sure about other countries, I'm not going to speak for other countries, but in Australia, liquid assets account towards houses. So housing market will fall. We take a look at companies, and this is a big one. This is what really impacts cryptocurrency and the current share market and everything that's happening, is that companies, when interest rates rise. Now, companies acquire a lot of assets on debt, and they've been acquiring a lot of assets on debt for the last few years because inflation, or should I say interest rates, have been very low. So when interest rates are low, they can take a lot of low credit money, they can acquire a lot of assets, and their repayments on these assets are very small. So obviously when you acquire an asset, your future earnings rise because assets produce income. That's what assets are for, they're asset producing income. So when you acquire an asset, they produce income in future periods. If your interest or your debt repayments on these assets are smaller than the perceived benefit or income from these assets, you have a surplus, and therefore your future earnings increase, or your future earnings are expected to increase. The problem is interest rates are rising. Therefore, the difference between the profit they make while holding assets and the debt repayment they have to make due to the interest or debt on the assets starts to diminish. Therefore, what happens is they have something called a debt to coverage ratio. All right, it's a mathematical equation that calculates the difference between what I just explained. It starts to decrease. When the debt to coverage ratio starts to decrease, their expected cash flows decrease, their future cash flow earnings decrease, and therefore their company starts to lose value, and or the investors require lower premiums, and or the company balance sheets start to look unhealthy to attract investors. So what does the company do? They sell off their risk assets to increase their cash flows, to make their balance sheets look healthier, to make their company basically stay afloat. So we are seeing all of this. Everything I explained in the last 5 minutes, quite long explanation, is visually represented on this chart here, the DXY. And the DXY has broken out of a 22-year long trend and broken that 103 level indicating we are officially in a new strong uptrend and we can continue much higher. What does this indicate? Well, it shows the difference between money in, or should I say, the US dollar strength compared to asset prices. So when it rises, we see strength of assets, or total currency, total cap of assets decrease, and the US dollar gaining strength on those. So it's a visual representation of a shift of value between assets and fiat, specifically US dollars in this case. So, yep. Wolf, anything you want to add in there?
Well, I would say that a lot of people, and a lot of like the people who are constantly looking for bullish arguments, which should be everyone, but I mean to an excessive point, would say that and would have said in the past that, oh, with DXY so overvalued, look how overvalued it is. The RSI is so high on the DXY. It's like, that's not necessarily how the chart works, right? TA does apply, of course, right? It's breaking triangles, it's breaking resistance, breaking wedges, etc. Obviously, TA works on it. However, I would argue that the DXY is a more fundamentally driven chart, okay? As you said, right? Companies and people in general are selling their risk on assets. What are they selling into? They're not selling into Bitcoin, they're not selling into gold, they're selling into dollars, right? That means the DXY goes up against other currencies and assets, right? So this is a fundamentally driven chart. Don't look at a resistance zone and think that, oh, the DXY is going to top out here and Bitcoin bottom is going to be in. That's not necessarily how it works. We're in the early stages of a recession. This is going to continue to go up most likely if the past trends are any indicator by that. That's almost certain at that point. And so that is almost undoubtedly negative for the S&P 500, negative for traditional markets, which at this point is negative for Bitcoin. So don't look at the technicals too much when it comes to the DXY. Obviously look at them, but understand the fundamentals, in my opinion, are a lot more important.
Correct. And I think a lot of people refer to the traditional stock market and say, look what the stock market's doing this week, or look how the stock market opened this week or closed, and look how it's going to affect Bitcoin. I think people need to zoom out and think Bitcoin, as well as stocks, are risk assets. They play by the same rules as what I explained. Bitcoin doesn't drop because S&P drops. S&P drops because of what we just explained, and the Bitcoin plays by the same rules. And I think going back to the death cross that's coming up on the 3-day chart, it's not because we're having a death cross that the price is going to crash. It's because the price is crashing that we're having a death cross.
Correct, 100%.
Because remember, guys, moving averages are moving averages. They take the average price over a specific period, and then they calculate it on a linear, or not a linear, but a dynamic range on the chart. So we can't say, oh, we're having a death cross, the price is going to crash. It's the other way around. Because the price is crashing, we're having a death cross. Therefore, when we see those moving averages start to pinch, we can tell that a big move is coming because they're pinching, not the other way around. It's a really good distinction to make when you're analyzing charts. And I think that's a big problem people make when looking at technical indicators, is they don't understand that a technical indicator, all it is a set of mathematical equations based on the price action. So when people say technical indicators or technical analysis doesn't work, they're essentially saying the fundamental mathematical principles driving price action is irrelevant. And that's completely and utterly false. It couldn't be further from the truth. If you are using TA and you're not getting success from TA, all that is saying is there's a disconnect between your application or interpretation of the data that you're using. That's all it is. It doesn't mean TA doesn't work. TA absolutely works. And if anything goes for proof, is myself and WolvesOfCrypto have absolutely, without a doubt, proven how effective TA has been overall.
Yep, correct.
I
just like to add. I said before, I just want to make a quick correction here, because as soon as I said it, I was like, oh, that's incorrect. I said before, inflation is reaching levels we haven't seen since the Great Depression. The Great Depression was actually a deflationary period. What I meant to say was probably the Roaring 20s, which was just before the Great Depression. That was the massive inflationary period where inflation reached levels of like 22, 23%. That's what I meant there. Just wanted to make that clarification, because I know people are going to be salty in the comment section about that one. But yeah, so do we want to jump into some questions? You got some questions on Twitter?
Yes, this is a great question. He said, tips on what to eat during a bear market. Wolf, do you have any tips? No, I'm just joking.
I don't know. You're the diet guy. I don't know.
This looks pretty good to me, mate. You keep doing what you're going to do. I'm sure every dollar's going to count for you buying Bitcoin. That's good. All right, let's have a look. Let's go from the bottom top. So risk of the SPA. All right, so we kind of talked about this already, and I kind of went over that in the DXY explanation, how the SPX is kind of not really the result, or not really tells you where Bitcoin's going, but it's more or less, it plays in the same ball game as Bitcoin. It's completely the same thing. Another funny question is Serial Soup. Here's a good question. So we get asked, where is the highest Bitcoin could go in a dead cat bounce scenario before continuing to the sub 30K region? Wolf, okay, I think you said you wanted to talk about that. Are you happy to answer that one?
Yeah, okay. I'll share my screen quickly as well. I may as well, because this is a pretty interesting question for that. Where's the highest Bitcoin could go in a dead cat bounce region?
So assuming the dead cat bounces here, where's the highest could we go?
The highest it could go. Okay, well that's interesting, right? I think if it went too high, it would invalidate a lot of that. So generally what I like to say is that in order to flip bullish on Bitcoin again, we need to be breaking a 200-day SMA. I think you're a big believer in that as well. I also use the 50-week sometimes. However, if it was to go all the way up to a 200-week SMA, for 200-day SMA after all of this, I would go ahead and say that you'd almost be leaning towards the bearish scenario being invalidated at that point. Seeing as we're broken down from this bear flag and this descending wedge formation, I would honestly say the highest we can go in a dead cat bounce region after all this bearish price action is probably this uptrending resistance box that I've labeled out here that we've had multiple tests on before. I'll try and delete everything on this chart just so we can get a better look at that. I think that when you're looking at breakdowns, what you want to be looking at is resistance support flips, okay? And in my opinion, this is one of the major resistance lines that we have lost during this breakdown. So I think that the best case scenario for Bitcoin right now, this is the best case scenario for Bitcoin right now, is we do something over here at 30K, we swing back upwards, do something like that, and then come back down. I think we could probably go to like 36K, maybe 38K, depending on where we get there. I don't see us going any higher than that. That's probably my opinion on it. Did you have an opinion on that?
I guess I totally agree with you. I think a extension from that question I think would like to put in, that I'd like to put into that too, is based on what happens. I guess I'm gonna go ahead and bring up my chart.
Complete that.
I think you should be able to, maybe you should be able to see it. Let me just go ahead and screen share. All right, you should be able to see my chart here. You're saying that diagonal resistance line. I agree. I don't have that on my chart at the moment, but I 100% agree with that. You saying that would be a potential high. I think the question leading into that would be, if that occurs, what should you do? What should be your decisions? What should be your movements? What should you do between now and there? I think just identifying and saying the price is going to go up without giving any reason to act or any potential decisions to make is not very important, not very helpful. So I'm going to go ahead and say, if we go up from here to here, so Wolf, you said 37, 38, yeah?
Somewhere around there, yeah.
All right. This is a scalp trading zone right now, all right? You're not long-term purchasing anything. There's no long-term purchases. There's no dollar cost averaging. There's no nothing. All you're doing right now is you're potentially looking for scalp trading setups where you can put a very small percentage of your portfolio in to purchase a nice scalp and maybe get a nice swing profit. But you'd agree, long-term investing is not on the tables. I would go and extend to say that 200-day moving average coming up on the daily, although it's sitting around, what is it, 47K. I'm going to go bring it up in a second. Although previous to us breaking down, that was our flipping point.
Yeah.
Because we're broken down now, and this structure has been confirmed to be a bearish breakdown, I would go as far to say that we would actually need to break above that 200-day moving average and clear this local top to make a confirmation of an uptrend. That is what my my difference in our analysis would be. For the short term, I would need to see a break over the 100-day moving average. If the 100-day moving average is broken, that would indicate a move up to the 200 where we could get rejected again. So there's a two-part question, and Wolf's first answer is 38K. Completely agree. If we happen to break past 38K, we have major resistance at 100. If we break the 100, we have major resistance at the 200. Every single time we get past these points of confluence, 38, 100, 200, the bullish sentiment builds. But the bullish sentiment isn't confirmed until we get over this high, in my opinion.
Yep.
Wolf, anything to add?
No, I think that's fair enough. Sure.
Cool. All right, next question. Should we have everything in stablecoins right now? Wolf, do you want to answer or do you want me to answer?
Well, I'll say this. if you're going to do that, make sure you're holding the right stable coins, because we can see stable coins like, well, stable coins in quotation, like UST, which is the Terra Luna stable coin, right? Absolutely tanking, going down to what, like 82 cents when it's meant to be pinned to the dollar, right? So be careful which stable coins you're holding. Personally, like, I don't necessarily feel 100% comfortable when people say I'm going to have everything in stable coins for months on end. I think to a certain point, if you're actively trading, sure, go for it, because you need that there. You need it in your portfolio, whatever. But if you're like a long-term investor, or I know a lot of people just like DCAing, you know, a lot of people who listen to our channels aren't necessarily traders. Try your best to keep a lot of your money potentially in fiat. You know, if you're not going to use it, why would you open yourself up to that risk? You know, stable coins aren't 100% safe. Yeah, they're safe, but you know, they're not as safe as you know, something like the dollar. You know, even though, you know, people in crypto like to trash the dollar 24/7, and, you know, yeah, inflation and all that, it's still, you know, very unlikely, or more unlikely to crash, you know, than UST or USDT. I think that's a good distinction to make, right? So if you're actively trading, sure, keep what you need in stable coins, but don't keep your entire net worth in, you know, USDT on Binance. It just doesn't seem rational, in my opinion.
Yep, just brought up the chart right now, and USDT, UST, sorry, is down around 13%, and it reached a low of negative 30%. So much for stability, hey?
Yeah, that's crazy. That's insane.
Personally, I keep my money in USDT. I don't care what people say about USDT. I also have my fears and speculations, but if history has proven itself, it's proven itself to be relatively stable, and if anything changes, I can make adjustments throughout. But yep, mostly fiat currency, and Wolf, I know Wolf's the same, USDT or fiat.
Correct.
And last question, what was both your journeys as a trader like? What were some of the level achievements along the way that you have made you realize that being a trader was what you guys wanted to do? I have talked about this already on my channel, but I'll just go ahead and quickly, I guess if you want to hear, go ahead. So I guess what attracted me to trading, and what attracts most people to trading is kind of what attracted me to trading, and I know Wolf's the same, is just the ability to have your own time, work when you want, and have control of your life. And I feel like that narrative is kind of sold to a lot of people as like a literal like method to sell people into courses or whatever. But yeah, I guess that's just a reality. People want freedom and control. And I had my own business as a PT. I was working for myself many years, and I kind of learnt the value of your own time and being in control of your time and your money and your job. And I was in a bit of gold trading at the time, and I kind of expanded from there into crypto. And you know, crypto is exploded over the last few years, and it'd be dumb for me not to have stuck around for it and gone with it. But really, my journey was just a little bit of a slow stepping stone, where I just went from one thing to another, and I lost a lot of money when I first started trading. It took me about two full accounts drained to really get the hang of technical analysis. And when I started trading, I didn't have people like myself or Wolf on YouTube or on Twitter or Reddit teaching you guys how to trade, or showing you the market, or helping you along the way. It was very much trial and error for myself. It was a lot of losses, a lot of painful memories. But like I said, when you practice something long enough, and I've been doing it for many years now, and you stick by it and you learn from your mistakes, eventually you're going to get good. Trading, like riding a bike, is a skill. When you start, you're going to fall over. And unfortunately, falling over on a bike, you hurt yourself. When you fall over in trading, you lose money. And the more and more you do it, the better and better you get, as long as you're learning from the way, and you're building on your knowledge and experience. And I think risk management is very important, because unfortunately in trading, 95% of people, they get wiped out to a point of no recovery before they even develop the fundamental skills they need to trade. And that's why I really push, and I know Wolf does too, when you're starting out, trade with a very small amount of money and use very tight risk management. Because the first year or 2 or 3 years, you are not going to be very good. You're not going to be very good solo trading. Wolf, do you want to talk about your intro, or are you just going to leave it? Or
Sure thing, yeah. Well, I think I'll lead on to your point in a second here, but I think the thing that attracted me to trading, again, working for yourself is great, right? Obviously, I think I've let loose on a live stream. I used to work at KFC, working for like $12 an hour. That was terrible, obviously. And then, you know, went into sole trading, and even then you started to get the freedom of working for yourself. And that was pretty addictive as well, but the money wasn't really there. So obviously money is one of the reasons. I mean, you'd be ridiculous. You'd be lying if you said that wasn't one of the cases, right? The money you can make in cryptocurrency obviously is probably better than, I'd honestly say, the vast majority of career choices you can have in the world being a trader. Not only can you have that profit potential, but also working for yourself and being on your own schedule, whatever. You need to be disciplined though. You can't just go into, I'm going to work for myself and then just, work in quotations for 1 hour a day by, going 100% into a low cap trash coin. You need to actually do the work. And that's why, me and MegaWhale Crypto created the Crypto Academy, but I'll go into that in a second. I think another thing that attracted me to investing in trading is the fact that it's not necessarily all mathematics, right? It's also psychological. And I think once you start to realize that the reason why price goes up and down is literally because of human emotion, it becomes very interesting from a psychological perspective. It's like, those fear and greed emotions aren't just thrown around for no reason. The price goes down, it's very much because of fear. The price goes up, it's very much because of greed, in a lot of occasions. I think that's very interesting as well, the psychology of trading and, how people react to certain situations and how you can literally see human emotions playing out on a chart in a mathematical format. Pretty interesting to me. But I think, using what you said before, and this is kind of a good question to go into the Crypto Academy. I'll just share my screen for a second and talk about it if you want to exit your screen sharing. Yeah, so the Crypto Academy is a course that we've made for, some of the reasons we've just talked about in the last 5 minutes. It's essentially become a trader, 10-unit course. If you want to learn how to trade, this is where you got to go. If you like either of our analysis or both of our analysis, this is where you got to go. So we created this within, this year sometime through massive community demand. A lot of people are trying to learn how to trade, trying to take advantage of the bear market, which is definitely the best time to do it, by the way, because you've got a lot of spare time. As some of the questions would have pointed out just then, you're in stable coins or you're in fiat or you're sitting there and maybe you're doing a couple of scalp trades here and there, but it's not as hectic as the bull market, right? No one can deny that. The bull market's hectic, 24/7 on the go. The bear market's not necessarily like that. You get these boring accumulation periods or whatever you want to call them. And that is the perfect time to maybe, slightly step away from the charts and maybe step into yourself and try to improve yourself, become a better trader. So when that bull market does come, or when that bear market drop does come, you know how to catch those bounces, or you know how to catch that massive upswing in the bull market. And this is what we've tried to aim for become a trader. So we teach you everything from, fundamental concepts, market patterns, indicators, literally everything you need to know, candlestick patterns, market psychology, as I just talked about, risk management, etc., how to find a trade. And we highly recommend you go ahead and email us here at cryptoacademycourses@gmail.com. The pre-order sale is ending in about 6 days. So we're going to raise that price once it releases. But if you want to get a little discount there, you can come and email us right now for the next 6 days and you can get a discount. We'll send you all the payment information, all the course information when you do that. So I think we should wrap it up there. Do you got anything to say there?
Yeah, that's it, guys. I hope you enjoyed. Remember, head over to our YouTube channels. Remember, follow Wolves of Crypto on YouTube and come over to MegaWhale Crypto on YouTube and chuck me a subscribe as well. We both post daily content. We post very similar analyses, but as you can tell, even in a video like this, we have our own little twists and own little opinions that we put on. But objective analysis, the truth. If you want all of that kind of stuff, we're the channels to be.
Thanks for watching, guys.